positioning, I've got a number of sort of charts in terms of positioning, and again, this is the bull case, which gets us into that move higher through the summer. What you see is professional investors are really offside still. You see this discretionary versus systematic equity position from CTAs, and what you can see, the systematic guys are still have low exposure. It's still below zero. The discretionary investors, we've seen that jump up here, but remember, discretionary investors can move sort of. I would say they're more timely in terms of that potential movement. Systematic guys, right? They're waiting for, well, the S&P 500 closed above the 200-day moving average. Okay, now we need to allocate some. Or the VIX has fallen below a certain level. Okay, well, now we need to add more equity exposure. Systematic guys can really get whipsawed in these crashes and V-shaped bottoms, because then their exposure just doesn't go back up until you get back above a long-term moving average, which when we were below the 200-day, I think we got as much as 13% below. You need to have a big rally to get back above it. But you can see that positioning-wise, still, you could say we're still early stages in terms of these professional investors. Same thing with the Bank of America Fund Manager Survey, right? Just for May, I mean, it's still hovering down near the lows, which is again where you saw it, in 22, 23. They were underweight equities, and so if the market continues to sort of grind higher here, they're going to be forced into adding exposure to U.S. equities, especially